Today, we'll speak about 6 books that Michael Burry believes every investor should read. Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started. You guys might ask how we know that Burry actually recommended these. Well, there's a cool story behind that. He actually recommended these 6 books back in a forum, a Silicon investor during a Q&A back in 1997, way before he became famous for his 2008 bet against the real estate market. Number 1. Common Stocks and Uncommon Profits by Philip A. Fisher. Yet another book that's highly revered in the world of investing and an all-time favorite of Warren Buffett. In interviews, Burry has stated that Fisher's principles were crucial in the development of his portfolio. While Benjamin Graham advocates buying inexpensive companies early and holding them, Philip Fisher's thinking was the polar opposite. Philip Fisher's strategy, which he spells out in his book, was to select firms that were reasonably priced and expected to grow, as well as companies that could be held for a long period. On the surface, Fisher's investment theory was straightforward. Buy a focused portfolio of firms with attractive growth potential that you fully understand and keep for a long period. He is well known for stating that the optimum moment to sell a stock is virtually never. Fisher recommended investing in businesses with a growth orientation, high profit margins, high return on capital, a commitment to research and development, a superior sales organization, a leading industry position, and proprietary products or services. His most famous stock pick was Motorola, which he purchased in 1955 and held until his death. He was known for conducting extensive studies on firms in which he planned to invest. Before buying shares, he depended on personal relationships, which he referred to as the business grapevine, and talked to learn about companies. Warren Buffett has stated that his investment strategy is composed of 85% Benjamin Graham and 15% Philip Fisher. Number 2. Why Stocks Go Up and Down by William H. Pike. A crucial skill for value investors is the ability to evaluate a financial statement to determine whether a company is valued correctly, and William Pike's book has been a top recommendation for investors who want to develop this technique for decades. It covers financial statement analysis, cash flow creation, stock, pricing, and valuation, among other topics. Frequently misunderstood words such as capitalization, diluted earnings, or equity are thoroughly clarified. Price-earnings ratio, price-cash flow ratio, enterprise value, and EBITDA are all discussed as stock appraisal approaches. The focus on the text is on the essentials. It's not a strategy for making $1 million in the market. The subtitle sums it up best. The book you need to understand other investment books. Number 3. Buffetology by Mary Buffett and David Clark. The name Warren Buffett is synonymous with success and fortune in the world of investing. Following Warren Buffett taught Burry a lot, as it did many other investors. Buffetology is a book that delves into Warren Buffett's financial strategy. The book examines decades of Buffett trade as well as the lessons that might be learned from them. Buffett began investing using the Ben Graham technique, buying a large number of cheap companies, but his partner Charles Munger persuaded him that it was better to buy good companies with high potential rather than cheap companies with high potential. Buffett significantly outperformed Graham with the support of Munger. The essential realization was that if you solely focus on getting something for the lowest possible price, you'll wind up with a portfolio full of mediocre companies that never really realized their potential, or even worse, observe that their value deteriorates over time, as many of these low-cost businesses are low-cost for a purpose. If, on the other hand, you bought a fantastic firm with a long-term competitive advantage, what Buffett refers to as consumer monopoly, and which can regularly compound above average profits, the price you paid becomes less of a concern because the company's worth will slowly improve over time. Time is the friend of a wonderful business, the enemy of the mediocre, as Buffett puts it. This book clearly chronicles Buffett's growth as an investor and how he established his own views that put him on the pedestal that he now sits on. Number 4. Value Investing Made Easy by Janet Lowe. The subtitle of this book says it all: Benjamin Graham's Classic Investment Strategy Explained for Everyone. While many people think this book is too basic to make big trades, it's worth reading to really comprehend Graham's principles without feeling overwhelmed. Janet Lowe, a financial journalist, demystifies value investing and provides you with basic trading methods that can help you reap tremendous gains using her easy-to-understand manner combined with entertaining anecdotes and quotes. Burry himself places this at the bottom of his priority list because while it's a fantastic book, it needs to be reinforced by reading Graham's actual works. This could only serve as a stepping stone. Number 5. The Intelligent Investor by Benjamin Graham. This is a classic value investing book. Among the greatest investors of all time, The Intelligent Investor is a popular choice. The lesson, which was prepared by Benjamin Graham in 1949, has been modified numerous times since. It is ageless. Burry has stated several times that his investment strategy is based on Benjamin Graham's rising market theory. In short term, the market is a voting machine, but in the long run, it is a weighing machine, as Graham memorably stated. Graham demonstrates in this book that short-term prices are influenced by an investor's mood rather than fundamental analysis. Burry claims that this has helped him uncover inexpensive stocks and that have appreciated dramatically over time. He isn't the only one who thinks this way. As a result, all of the top investors, including Warren Buffett, recommend reading this book. Number 6. Security Analysis by Benjamin Graham. Graham has written yet another book. We can observe how much he has influenced Burry's investments. The Intelligent Investor was written by Graham with the goal of teaching value investing to the general public. On the other side, Security Analysis is more of a technical book intended for people interested in learning more about value investing. The goal of Security Analysis is to offer key information about a stock or bond in a way that is both informative and beneficial to a potential investor, using data and criteria to reach solid conclusions on security, safety, and attractiveness in relation to the present price range. Warren Buffett has praised this book multiple times, and Burry has said more than once that his investment style is built upon the book Security Analysis. All of his stock picking is 100% based on the concept of a margin of safety. The reason this book is so low on his list, however, is that while it's worth its weight in gold, it isn't a book even for an intermediate investor, and definitely not a starter's book. The advanced concepts take the experience to understand and apply, and therefore are not for the average investor. Number 7. The Big Short. A book recommendation from Barry and Jamie May, the president of Cornwall Capital, amongst many others. The book discusses a type of investing Greenblatt has become known for: value and special situations investing. The idea behind the approach is to find events that have little to no impact on the underlying fundamentals of a company, but which devalue the company's stock price. Well, there are many varieties of special situation investing. One, for example, would be investing in companies that recently incurred some bad PR. Perhaps their CEO left or Elon Musk tweeted about them. Situations like these cause the price to drop even though the fundamentals of the company haven't changed. This creates an opportunity to buy low. Michael Burry has created a lot of value from this kind of investing. He was known for shorting the 2007 mortgage bond market, and he held some stock in GameStop late last year. Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video.